Okay, you need to see this. There's a pattern clicking into place in the economy right now, one that's been asleep for half a century. And the last time it appeared, it created fortunes for people who saw it coming, and it absolutely wiped out everyone else. Now, that was 50 years ago. But what's happening now is, well, it's more than just an echo. It's like we're watching the same movie again, scene for scene. So the question isn't if it's happening. The real question is, this time around, which side will you be on? And let's be really precise here. When we say 50 years, that's not just for dramatic flair. The data is screaming it. This specific alignment of economic forces is incredibly rare. So let's treat this like a proper investigation. First things first, we need to name our suspect. What is this thing? What do the pros call it, and why is it so incredibly dangerous? The term you'll hear is stagflation, and there's a good reason people are scared of it. Think of it as a three-headed monster attacking all at once. Prices are going up, the economy is grinding to a halt, and people are losing their jobs. It's a truly toxic mix. Right. And this is why it's a total nightmare for the people in charge. It's the perfect economic trap. Every tool they have backfires. If you try to fix the slow economy by lowering interest rates, you just pour gasoline on the fire of inflation. But if you raise rates to fight inflation, you send the economy into a nosedive. You're stuck. There is no good move. The last time the US was caught in this exact trap was, you guessed it, 50 years ago. So let's crack open the case file. We're going back to the 1970s, because what happened then is literally the blueprint for what we're seeing today. Okay, you have to follow the chain of events here because it's critical. It kicks off in 71, the US dollar is cut loose from gold, which basically lets the government print money like never before. Then, bam, 2 years later, the OPEC oil embargo hits, and the price of oil quadruples. That 1-2 punch is what lit the fuse. Inflation skyrockets to over 13%. The Fed had only one move left: raise interest rates to a mind-blowing 20% and intentionally crash the economy just to stop the bleeding. Whoa. Okay, and look what this did to regular people's money. This is insane. If you were in the stock market, your account went up, but inflation actually made you poorer. Your savings account? Totally wiped out in real terms. The only thing that worked? Gold. And it wasn't even close. It just left everything else in the dust. That's a staggering difference. But here's the thing. That's just the first act of the play. 10 years is just a snapshot in the world of investing. True wealth isn't built in a single decade. So what happens when we pull the camera back and look at the bigger picture? And this is where the story completely flips on its head. Over 20 years, the person who just patiently held their stocks, they end up the massive winner. And gold, the hero of that first decade, it comes in dead last, getting crushed by inflation. The tables turned completely. And that reveals the core truth here. Gold isn't an investment in things getting better. It's a bet on fear. It spikes when there's panic in the streets. But once that panic subsides, its reason for being there kind of fades away. The people who really won didn't just buy gold. They knew when to sell it. Okay, so bring it all back to today. Why did we just go through all that history? Because every single piece of that 1970s puzzle is now on the board again. The pattern isn't just rhyming. It is repeating right in front of our eyes. Just look at the checklist. Step 1, massive, historic money printing after 2020. Check. Step 2, a major energy shock that sends prices soaring. Check. Step 3, the economy starts to slow down, losing jobs even while prices stay high. Check. And that leads to step 4, the Federal Reserve is now in the exact same trap they were in 50 years ago. And hey, don't just take it from us. Look at this. Market veteran Ed Yardeni puts the odds of a full-on 1970s replay at 35%. I mean, just let that sink in. He's saying there is a 1 in 3 chance we are walking into the most difficult economic environment in half a century. So that brings us to the billion-dollar question, right? If the threat is the same, is the answer the same? Do we just copy the 1970s playbook and pile into gold? Well, here's where it gets really interesting. The answer is no. You see, the 1970s playbook is out of date because the world itself is a different place. We have an AI revolution that is incredibly hungry for power and raw materials. We have global supply chains being completely rewired. And we have massive shortages of the critical minerals needed to build, well, everything in our modern world. The danger looks familiar, but the opportunities are brand new. And what all the sharpest minds are seeing is what they call a great rotation. There's a huge shift in capital happening right now. Money is moving away from paper assets, stocks and bonds, and it's flooding into hard assets. The actual physical stuff you can stub your toe on, the things our world is literally built from. So where exactly is that smart money going? It's focusing on 4 key sectors. First, energy, especially American producers. Second, defense and aerospace as the world gets more tense. Third, and this is a huge one, the physical backbone of AI. Forget the software for a second. Think about the data centers, the power grids, the copper wiring. And fourth, a broad move into the commodities and real assets, the stuff that builds everything else. And if you want to see just how powerful this shift is, just rewind to 2022. The entire stock market got hammered, down 18%. But the energy stocks, they were up 65%. I mean, look at that divergence. That's not just surviving, that's thriving in a way that almost nothing else could. It's incredible. And this really is the final lesson. The mistake most people make is they wait. They wait until it's obvious, until it's on the nightly news. But by the time you're absolutely certain, the game is already over. The prices of the assets that won have already skyrocketed. The winners are the ones who act on the evidence before the verdict is obvious to everyone. So we'll just leave you with this one last question to think about. For the last 10 years, the winning strategy was betting on the digital world, tech stocks, paper assets. But all the evidence we've just looked at suggests the next decade is going to be one in the physical world. Your portfolio was built to win the last war. Is it ready for the one that's right around the corner?